gold and silver is going to do very well. I think that we are on probably like the third or the fourth inning for gold and silver, and the best is yet to come. Silver went up to $50 in 1980, which means that the dollar, in today's dollar, silver has got to be a $200 to $300 as a fair price. If you look at 1972 as a guide, so 1972 gold is 30, it went to 800, so it went up about 25 times. So similarly, if you look at 2000, which is the start, right, of the major run where the guys lost the handle on things. So $250 times 25 times is $6,250. So $6,250. So if the goal was to embark on.
Mr. John Lee, thanks for coming on the show, my friend.
Good to be on your show for the first time, I believe.
Yeah, first time. So for people who may not know who you are, John, give us a brief rundown on your investment journey. Who are you and what got you into investing?
I'm a chartered financial analyst with over 20 years of experience in the metals and mining space. I started out as a retail accredited investor, having retired from Silicon Valley in early 2000. And I was doing very well. And then, so the first decade until 2010, after the financial crisis, I recovered bulk of my investment, having made quite a bit of loss. And then I thought it'd be fun running a junior mining company. So I started a junior mining company, Silver Elephant, used to be called Prophecy. And then now it's 14 years later. The company has raised over $150 million through the Toronto Stock Exchange. We've acquired dozens of assets around the world, travel over 35 countries. And my specialization is silver and to some extent nickel.
Got to silver and nickel. Both are silver is derivative of the gold mining, various gold mining projects, right?
Majority of the silver is produced as byproduct.
Yeah.
So it's typically associated with the lead and zinc based metal deposits in China and also in South America, countries like Peru and Mexico.
Gotcha. So let's just start things off on a very macro scale. What is kind of like your general view of the market at the moment? Like if you were to take a 60,000-foot view of the market, what would kind of be your take?
Whoa. Well, we can bring it down to the ground level to start with. If you look at technically, we are embarking on we've been through a debt binge over 40-year Treasury bull market, and that's come to an end. The interest rates were 10-year was as low as 1.5%, and now the 10-year is trading at about 4.5%, and the mortgage rate we're down to 2 to 3%, and now it's up to 7% mark. From a historical perspective, it is still averaging. It's still on the low side. So I see that we've gone through this almost an engineered debt binge, and now the power that be are calling the debt to roost, and we're going to see quite a lot higher interest rates. What is interesting though is the effect of higher interest rates hasn't been sort of having been that negative impact, seeing negative impact on the economy, and you see that from S&P and NASDAQ that are establishing all-time high, a sort of versus the pundits that were saying that if interest rates would double and the world is going to fall apart. So overall, the trajectory trend is higher interest rates and steadily higher equity market, and we could talk about the geopolitics, and that would take a lot of time. However, with this elevated equity market and continued money printing and inflationary environment, gold and silver is going to do very well. I think that we are on probably like the third or the fourth inning for gold and silver, and the best is yet to come, both from technically perspective and just from purchasing power. I mean, I remember if you to watch some of the interesting, like some of the soap drama, some of the the kung fu, like the Chinese episodes of movies.
Yep.
Maybe like 1,000 years ago, a meal you will pay for an ounce for a good feast, right? For a good, nice feast meal.
Yep.
So today, if you're to have a nice table food, it'll probably cost you around $500 to $1,000 for US dollars in New York, and in lesser part of the world, still going to cost you a couple $100. So that is really sort of the matrix that I see for the price of silver, an ounce of silver. So from looking from that and just the purchasing power of the dollar, silver went up to $50 in 1980, which means that the dollar in today's dollar, silver has got to be a $200 to $300 as a fair price. And we can talk about how it's going to get there, et cetera. And then gold is going to be obviously quite a lot higher on the 7-to-1 gold to silver ratio. So that's my overall theme. I'm not so much on a doom and gloom. I don't see people going starving on the street or going crazy. But so there's definitely pockets of money to be made. The overriding thing, however, is higher equity price, higher interest rates, and higher metal prices going forward.
That seems kind of counterintuitive, right? Especially to what you kind of alluded to before. People would expect quite the opposite in a higher rate environment. So why would that be the case? Why would precious metal prices go up in a higher interest rate environment then?
You're right. If you look at the dollar as an asset, and you have different asset classes competing for money, if a risk-free rate is 5% like it is today, then a stock used to trade at $100 that's giving 2.5% dividend yield will be trading at $50, right? Because the risk-free rate is doubled. What we have though is Danny, is quite a little different from the past. My view on that, from being a CFA and economics major with honors, is that if you have doubling the interest rate and with the lackluster economy, you should be had a stock market that's half of what it was 3 years ago. However, there is the theory and there's the practice. Every time I shorted, I lost money. You have some of the biggest hedge funds like James Channels, the close to $8 billion fund. And my answer to that philosophically is my only conclusion is that there's some people that are not playing by the rules. What I mean by that is, if you were the king, like you were 1,000 years ago, and you own the castle and you control 5 billion people that report to you, your wealth is not measured by the money that's being printed with your face on it. Your wealth is measured by the gold, by the silver, by the farms, by your outreach, by the newspapers, by the teacher, by the schools. You have to communicate. You have to continue to control the narrative, etc. So if you fast forward to today, it's really not much different. Probably 5% of the top 1% of the people control top 80% of the assets. How do I know? Well, Vanguard, State Street, and BlackRock, and then they control 80% of S&P today, right? And they continue to buy in hundreds of billions of dollars range. So there are some people that are not playing by the rules, and their control. Today's assets are what? AI, nanotechnology, the Microsofts, the Apples, the Facebook, the media, so they can control the narrative, and they also control key infrastructures, etc. So, and that's what going up in prices. So, in conclusion, from that perspective, they're not playing by the rules. If 5% is not going to deter the buyer from taking out all-time high levels on the Nasdaq, certainly 10% is not going to make a difference. And they have to have a piece of NVIDIA, TSMC. It's just they are the king that's controlling the narrative. On the gold and silver, real quick on that, as I mentioned on different shows, it's not so much as a play on inflation. If you look at gold as a hedge for inflation, what certainly hasn't done too well of a job right now. And then certainly also that Japan is also an example of very low interest rates, still very low inflation. So I think the definition inflation is very tricky. My personal view on why gold prices and silver prices going a lot higher is to do with the breakdown of the hegemony, the dollar hegemony. Used to be that the dollar is a marriage of convenience, a marriage of convenience. The Saudis were looking for protection, and the Saudi is selling oil, and then US is printing dollar, right? The same for Japan. And then China is needing technology and needing skills and infrastructure development. So China is shipping overpriced good for an overpriced currency. So it is all a marriage of convenience, and US is playing reasonably well. sort of unbiased, good cop in the world, as being the statesman in fixing problems and just being the big brother. But now everything is different now. Like on the flip of a button, right? Russia, $300 billion. That used to be that US dollar is the safe haven. If any yield-gotten gains from South America, from Mexico, from the Philippines, from China, like the movie The Hunt of the Red October, you would dream, right, of buying a ranch in Montana. But now, no. If you're Russian, the last thing you want is go to New York, right? And then you can't even wire money from your Russian bank to SWIFT anymore. So then people are looking at, well, how is my wealth going to be protected? All the central banks, all the well-to-dos. So I think that the gold and silver is going to go up further because the world is going to be even more fractured than we are right now. We can talk about the Ukraine situation. I did a study in China and Taiwan. And the second reason people gravitating towards gold and silver is they want to get away from this micro mandates of the digital currency, which is going to be dictating you on what you can buy, when you can buy, where you can buy, where you can go, and what you can eat and what you can shop. You're going to be throttled on and that in conjunction with the carbon credits, you're going to be throttled on where you can go and what you can eat. Like if you take a flight from Taipei to Toronto, that's all the carbon credits you're allocated for the year, 1,000 tons. Then you're going to be eating tofu for the rest of the year. And guys are not going to be put up with it. So I think there's a lot of guys that are billionaires. They are just in the back, right? They're just buying gold and silver because they know that's the only way they can continue to live the life that they want to live and not to be bothered by the guys that are in control of and imposing their wealth through the advent of digital currency and the carbon credits. That's the two reasons gold and silver is going to go up. So the silver gold reason go up is different from the set of investors that are buying equities. The guys that buy gold and silver are the guys that are in Defiant, right? They are the guys that they're defectors of the wolf pack that don't want to be part of that regime with the boys at the top.
What do you say to people that make the case that you look at places like Argentina, you look at places like Lebanon, you look at places like Venezuela, maybe not Venezuela, Turkey. Yeah, where you would think that this would be the perfect scenario for people to want to trade in gold and silver, but they're more so looking at the dollar as a means of exchange.
The safe haven, right?
Safe haven, yeah.
I agree. Why? I was in Brazil, 1998, and I see what they did. Kind of like what Argentina did just recently, 6 months ago. They were literally on the Friday, the bank would close. They would convert US dollar. They would convert your US dollar on the official exchange rate, say one Argentina peso to a dollar. So suppose you own $1 million sitting in Argentine bank. On the Friday, they would close the bank. And then overnight, they would devalue Argentine peso from parity to 5 peso to a dollar. And then all of a sudden, so we convert your $1 million to a million Argentine peso. And then on the Monday, if you were to convert that million pesos back to the dollar, you end up with $200,000. It's so sad. I was in Turkey last year, and the people are so sad. Like when I went there, Erdogan just got reelected. And when I went there, the first day I got there, the lira was 22 lira to a dollar. By the time I leave, a week later, it's 28 lira to a dollar. And these pension people on fixed income just getting decimated. And it's a very sad scenario. You're asking me why they don't buy gold and silver? They're brainwashed. Watch too much television. I think it's you open your television, what you see is Hollywood and the banks, the Fed on television, and also it's a Ponzi, right? People can never get away with interest. Like you put it there, you got 5% or 6%. So what they ended up is also if you go to Taipei for Taiwan, for example, in Asia, if you go to the bank, you have this table of all the interest rates and currency. So people fall in love with this game of today's Australian dollar and tomorrow is the pound and euro, which is the objective of the power that be. They want you to be trapped into this game of interest rate differential, right? But eventually, people say, "Oh, gold is like my mother she said, "Oh, gold is a terrible investment. It doesn't give you any interest. It's barbaric relic. It's in the old ages. And my grandpa buy gold." But if you look at gold, I mean, gold is one of the best investments since year 2000. I remember because gold is $200, $250 when I moved to Vancouver 2002, and 10 years later, it got out 10 times. If you'd have put your money on real estate, it's probably, then it was about $250 a square foot. Now it's about 1,500. It got up 7 times. So I don't think there hasn't been that many investments that yielded as good as gold has. Certainly equity market to some extent, but gold is going to continue to do well because, like I said, a lot of problems going to surface on just the dollar transacting, being a good currency, having all this international issues with the SWIFT system, and the well-to-do just not going to put up with these micro mandates, and then coupled with all the central banks are flush with trillions of dollars collectively, that they're going to have to think twice about putting all their eggs in one basket if somehow they run afoul of the U.S. and getting their SWIFT system cut off. It's like literally get your neck cut off, right? Sliced, and it just it's precarious.
Old habits die hard.
Yeah, yeah.
What about, so we mentioned why central bankers, centimillionaires, billionaires buying up gold. What about silver? Silver, when we see these monetary resets, we understand why the central bankers are buying up gold. But what is silver's use case? Because silver is part monetary metal, but also part industrial metal. So where does silver fit into all this in a great monetary reset?
Silver has always been money. The problem with silver is there's not enough silver to go around. If you look at Jeff Bezos, I don't know how much it's worth, like $300 billion. Well, if you look at annual silver production of 1 billion ounce, of which 30% is investment and 70% is industrial. So spare silver for investment is only 300 million ounces. At $30, that's $10 billion. So that's not even sizable enough to fit a Jeff Bezos. So that's the problem. There's not enough silver to go around. And that's why they have to go for gold. But then what happened is once gold started making a run, and then the peasants, right, the little guys, the poor man's gold, then they'll start buying the silver. There's just not enough. The answer to your question is there's not enough silver to go around at the current prices. And they're just not enough. There's just not enough to go around. It's just not good enough of appetite. They are really quite a very different market because 70%, like I said, silver is industrial, right? And whereas all the gold is money. All the gold that's ever been mined is money. So gold is less affected by economy. It's less affected by, it's like if you look at the gold in the run up in January 2024, it's just going up every day, right? But silver is about jerky. It's about jerky because it's less available, different type of participants. It's not as liquid. It's got that perception that it's a poor man's gold, but it doesn't mean it's less valuable. I mean, certainly when there's a big run up in gold, silver is also going to catch up.
Gotcha. So you mentioned we're in the 3rd or 4th inning of this precious metals bull cycle. Where do you see this having started? Meaning, if we are in the 3rd or 4th inning, that's about 30 to 40% of the way there. How much longer? How long has this thing been playing out? What do you think?
The metals, as you realize, their trajectories don't go linear. So even though if you look at when Nixon closed the gold window in 1972, 1973, gold went up 20 times from 1970 to 1980 to 800. But from 1980, it went sideways, right? For what? For 30 years before gold challenges 800 again. So there's periods where and I think there's a lot of different reasons for that. The high interest rates back in 1980 cemented the dollar status for a few decades, of which they're buying time, right, for the dollar. Even though there's not explicit pack of the dollar to go to dollar, but it's still very, very heavily managed at this $2,000 level, which has gone on for more than 10 years. So that level has been breached. I won't get too philosophical and gold is money, etc. It's Aristotle, etc. All that. But if you look at technically, when that last peg was let loose at $30, and that was I studied history because I was born in 1974, so I wasn't there really to experience what happened. But based on what I sort of study and read, in the 1950s and 1960s, there's a lot of money printing, but the people were oblivious about the money printing. So it's only when they come home to roost that there's too much money in exchange for $35 gold. They could not hold that level anymore. That's what they let the gold window break the gold window, and all the money printing in the last 20 years come to roost and manifested in a 20x gain from 1970 to 1980. So Danny, if you look at from that perspective, what we have today is very, very similar. You have a lot of money printing from 1980, right, to 2010, and gold is being managed relatively easily for 30 years. But now that the $800 broke, and as soon as the $800 broke, you notice how quickly it went from 800 to 2,000. So 2,000 is only kind of like went from 30 to 200 back in the 70s. But that is only a very brief stop before it goes down to 800. So if you look, my point of that sort of interesting exercise is, if you look at 1972, I shared this only one time with other speakers, so I want to share with you here. If you look at 1972 as a guide, so 1972 gold is 30, it went to 800, so it went up about 25 times. So similarly, if you look at 2000, which is the start, right, of the major run where the guys lost the handle on things. So $250 times 25 times is $6,250. So $6,250. So if the gold were to embark on the same trajectory, again, right. I don't know what happened in the 70s as a child. I only know interest rate went to 20%. There's a Vietnam War, kind of similar to today. And the war is going on war, kind of like today. So in that similar realm, then 6,250, and then now we're a third inning through, so we're about only $250 to $2,000 right now. So from here, it's going to go from $2,000 to around $6,000. So that's a simple exercise. But you don't know what's going to happen with the digital currency. You don't know what's going to happen with the euros. So there's a lot of different things that will be going on to play. But seeing what we have, though, in technically speaking, given there's a major breakout, usually having a 10-year breakout is not going to just stop at 20% level from what the breakout is at 2,000, right? So we're going to do a bit of retest right now at 2,200, 2,300. Then the next major run is going to take gold to around 3,000 or maybe or even higher. And then you're looking at like I said, in this run, right, from 1980 to 2010, it's 30 years. From 2000 now it's 2024, so you got about maybe 6 years for that 30-year cycle to complete, which is 2030 agenda of own nothing and be happy. So you're probably looking at this run right now, run its course in the next, I would say, 6 to 9 months at about $3,000 range, and then you're gonna stay there. Maybe if history is any guide, it will stay there for maybe 3 to 5 years before that run up again, because like I said, it doesn't go linear.
Hey guys, quick pause. Have you ever dreamed about seeing any of the cool guests that we get on Capital Cosm or that you see on these other YouTube channels in person? Well, now you can. We can see Rick Rule, Adrian Day, Danielle DiMartino Booth, Dr. Nomi Prinz, Grant Williams, James Rickards, Lobo Tigre, and more. You can do so by joining the Rick Rule Symposium, July 7th through the 11th. You can register now. Link to that is down below. And it takes place in Boca Raton, Florida, on a beach resort. You get to meet all the cool people that you've been watching on YouTube, and you get to do it beachside, on a resort. What more do you want? If you're interested, link to that is down below, and let's get back to the video. So are you able to extrapolate anything on the silver side of things, given this gold forecast?
Very, very difficult. Very difficult. Silver is very, very difficult to trade. But like I said, if you were to, an interesting exercise I encourage your audience to do is just put a silver coin in your pocket. And then when you're going shopping and you look in a silver coin, you say, will I be willing to exchange the silver coin for whatever that I'm buying, right? So like, for example, if you were to go to, like I said, if you go to New York and have a good meal for $100 for a piece of steak and a couple of drinks, it's like, okay, would I be willing to exchange that silver coin for that steak? So that will give you some good idea as to what the fair value of silver is. I don't know. If gold back to 800, silver went to 50, So, that's a gold to silver ratio to what, 850, so less than 20, right? So if you look at a $6,000 gold and at a $20 gold to silver ratio, you're looking at $300 silver, which is not impossible. And I think cryptos also give you some guidance, also depending on how heavily managed things are. One thing good about gold and silver is the cartels can manage, the managers and the invisible hands can discourage, can ridicule, can laugh at you, can do all sorts of things to discourage you to buy. But eventually, if you have the fiat, there's really nothing that stops you from buying gold and silver. So from that regard, there's really not a lot of things that can control the path of gold and silver. If it does, it's almost like, to think of it like a bonfire. Once you lit a bonfire, you don't know how big it can go, like forest fire. You don't know how it can go or when it can be controlled. But then the caveat, though, is the advent of digital currency that's going to limit the choices. Like the gold and silver trade is going to go underground, unfortunately, through the dark web, because digital currencies, the governments would not permit you to buy past certain quota of digital currency, of gold and silver with the digital currency, which is a scary thought. And that's why, I talked to many of, like my family, even we started buying gold and silver. We started buying silver in 2005. We bought another tranche in 2015, and we started buying gold again just last year when the gold is 1850. Not to make a trade to make money for dollars, but just as a safe haven.
Yeah. So what about the miners? The miners are a leveraged bet on the precious metals themselves. What do you think of the miners at this present moment, considering that that the precious metals have run up, but the miners have lagged behind?
There are three reasons. That's a question many people ask. I run a junior mining company, so I used to be investor, so I have that sort of a rare perspective of looking from both sides of the aisle. I would say there are really three reasons. First of all, gold and silver haven't caught up with inflation. Gold and silver mining companies are not making money. First Majestic Silver announced quarterly earning, even at $30 silver, they struggle to make money. And same with gold. Gold is a little better. And gold mining companies are doing fairly a little better. It just shows that silver is more undervalued. So also that gold and silver mining companies, they are a reserve depleting business. Like the First Majestic 5 years ago, right? They're $27 an ounce. $27 a share. But an average mine is got about 10 to 15-year mine life. So the First Majestic you see today is the silver that was there 15 years ago at First Majestic is long gone. Okay, so it's an asset. It's not an easy business. It's an asset depleting business. It's money losing business. That's why it hasn't garnered a lot of interest yet. That's why there's still the likes of First Majestic still trading at 70% from the top, and some of the junior companies like us are trading 80% from the top. That's the first reason. Second reason is mining companies are share prices are managed just like gold and silver. If you are spending hundreds of billions of dollars managing, suppressing gold and silver, you certainly don't want silver and gold mining companies to be ripping, right? Because people say, well, I don't want to buy silver physical. I don't want to they're just like, I'm not making money on gold and silver because it's suppressed. And now I buy mining companies, which has got tens of millions of ounces of gold and hundreds of millions of silver in the ground. So if they are managing prices of silver and gold, they certainly want to be managing prices of First Majestic and mining companies. How do I know? Well, like I said, I run a mining silver mine. Even with a small mining company, I will venture to say on a typical day, 80% of the volume is algo driven. Surprise it or not, I kid you or not. So, and also there are days where even gold and silver prices doing quite well, and you see First Majestic got whacked right at closing. Say, what the hell is going on? And the next day, it's almost somebody has the crystal ball. Then the silver prices got whacked. I think last Friday, it's all very good examples. And mining shares sometimes go very laggard, and then, or there are days where silver, like February, when silver went up only 1 or 2%, but the silver mining company went crazy, 5 to 7%, right? Because again, somebody knew that the cartels is given the green light for metal prices to go to the higher level because they cannot defend the previous lower level. So that's the number two reason. Number one is they're just not making money and they have a depleting reserve. Second one is their prices just managed. Their prices just they're being shorted, naked shorted, just like they're being shorted by the gold for the metal. And number three is today is very much like year 2000 in that mining company investors are different from metals investors. today, as I told you, share with you, that gold investors are the central banks, are the Putins, Xi Jinping's, Jeff Bezos, Elon Musk. They're even Warren Buffett. It's barbaric revenue, doesn't generate income. They're just paying lip service, but behind the back, they know they're buying. But whereas mining shares are you and me, right? They're just not big enough of a universe. Like first of all, just is $3 billion, just not enough to do. So they're not buying shares to make money, to make more money, right? To add more digits to their bank account. They're buying gold and silver to diversify, risk hedge. So the investors are different. And from that perspective, just shows you that I still think I'm still a true believer. I think that this run is going to pass 2,800 for gold, and silver is going to get to 50 by the end of the year. If not, the latest by this time next year. Because gold and silver has run up quite a lot and breaking out of technical, very strong resistance technical levels that translates to much higher prices to come. Yet the shares are not catching up. So it just shows you that there's they're climbing a wall of worry. They're not trigger happy. And so the people are buying they are very selective, and they have a big war chest, and they're carefully accumulating, but it's still in the minority. And you're gonna have to see $2,800 gold and $40, $50 silver to see the miners coming back to their previous highs. That was only 3 years ago.
Yeah, I mean, as nuts as this may sound, it's very sane. You've seen the statistics, I'm sure, because 1% of all total global assets are gold and precious metals. So, allocations, right?
There you go.
Now, I mean, like, compare that to the 1980s, you're at 26%. 1970s, you're at 30%.
Yeah.
So
1% you know what, though?
today, 20 to 30%, 30 years
ago.
What,
Danny? I mean, I'm encouraged somewhat in that the millennials, the Gen Zs, they are, because it's much easier it's kind of like herding, right? It's much easier if the sheep's only look one direction and you have a guiding shepherd, kind of like can do the rounds and circles, right? But now nobody watch mainstream television like the Gen Zs, right? They have so many channels. They listen to us. They can see the price of gold and silver in the long haul. They read different alternative interpretation of history, and they have different points of view. And they also notice that gold and silver is the only thing that makes them money. And it's been going up every year, and they hold it, they like it. So now you're seeing people travel. They bring gold and silver because it's mobility. So they will bring smidges of gold and silver, especially with countries where they have capital currency control. So I think steadily over time, people are gonna start it. This fiat currency is going to be over time become indistinguishable, and also the image, United States, right? Imagine the people in the 80s and 90s, even 2000, there's Hollywood movies, 90210, New York, Los Angeles. And now you can buy a ticket for $600 round trip from Asia to Los Angeles. They say, oh my God, what is this ghetto, right? So they start to realize, hey, like this, like the story is not, it's not gelling. It's something is different. Something's afoot. So people are asking questions and they're looking for answers, and they're not taking the mainstream answers for granted. So that's a very, very encouraging sign. You're also going to see, like, our company is based in Canada, and we just see a lot of also, with the Conservative Party, they're getting a lot of the youth following. So people are over time sort of understood that this 1984 idea just, sometimes doesn't work very well. And once you subscribe to this libertarian point of view, you cannot help yourself but start believing in gold and silver.
Do you think they'll actually be able to pull it off, though? The CBDCs, I see a lot of people beginning to see through it nowadays. Like it's become a mainstream thing.
It's inevitable. It's unfortunate, but it's inevitable. The cartels, it's been hundreds of years in the making. It started with the euro, started with the dollar. The Brent was a core 1, Brent was a core 2. They control all the central banks in the world. They control the ECB, the BOJ, the BOC, the Fed. Basically, remember the days, Danny? Remember the days when the oil was trading at $150 and the Canadian dollar was trading at a premium, and copper was $4.50, Aussie dollar trading at 20% premium? Look at today; all the currencies are the same. Just shows you all these currencies are subordinated to the dollar, and the digital currency is inevitable. It's imminent even for the euro. They're already talking the euro, and they're going out to say, oh, the euro, you can still have your paper money, you have the euro. It's kind of like you are at the bar, you're telling the girls, oh, no, we're just gonna be friends, right? Come to my place and hang out. It's writing on the wall. The digital euro is coming on in 2025. By 2030, your social credit score, your spending patterns, and your everything is going to be all tied to your digital currency, unfortunately. And yeah, there's going to be macro mandates like in China. If you jaywalked, then you cannot take the subway. So it's very scary. It's a little bit scary scenario we're embarking on. Also and the other thing is, the other problem is, oh, it's okay. I would just take my grandma's phone, right? We could swap our phone, and then I can use their phone to do my digital shopping. No, unfortunately, with the technology of facial recognition, I remember, like, I'm not even a U.S. citizen. I was taking a flight from Seattle to Houston. Nobody looked at boarding pass. I was like, wait a minute, like I don't hold a U.S. passport. Where did you get my digital biometrics? You know, every time you go to the passport, you do the fingerprint, you look at the scan, right? It's everything. The world, unfortunately, is all integrated now. There is an Oracle database that is a central depository of your biometrics. And unfortunately, by 2030, all your money is going to be in a digital wallet, and all your money is probably going to be only one currency by then. And then you're going to be shopping with your iris scan.
Yeah.
And if you start to say something bad like we're doing right now, then you
no more pizza for you.
You're gonna have a problem shopping, unfortunately.
No more ice cream.
It's gonna be scary. It's gonna be an interesting world. Can I share one more thing with you? I was talking to another guest. The extension, even more scarier, is I was just watching the Ukraine war unfold recently. The wars are not fought by humans anymore. They're fought by drones.
Yeah.
There is a Chinese mercenary soldier that went and worked for Russia on the Ukrainian fronts. They said the average person lifeline is 8 to 10 hours once he's been put in the battlefield. And he was recounting 12 people when then 2 people came out in like 2 days. And guerrilla war fights 24/7. There's not like a break. 8 o'clock in the morning. Let's go at it, right? And he just said he sees a drone. Once he got dropped off at the war front, he sees a drone. It's like a blackbirds of a sea of drones just heading towards you. There's some kamikaze drones, and there are some drones that will carry missiles, weapons, light weapons. Unfortunately, I have seen how tyranny government got toppled. It's not difficult. You have 10, 20,000 people that are defiant and march to the Capitol. The army declare mutiny, and there you go, right? Even in the Chinese Civil War, you have like only a university campus people went on Tiananmen standing in front of a tank. Just a few people, that was enough to scare Deng Xiaoping to be loading up all his gold and silver and Rolls Royce onto a 747, ready to jet. I've seen these kind of scenarios unfold in many parts of the world. It's not easy. It's actually very easy than you think to topple a tyrannical government. But the problem becomes if with the technology, with the drones, the guys can hide behind their back, even though the problem with the managers, the cartels, they're so outnumbered, right? In like maybe 10,000 to 8 billion, 5 billion. But now with the advent of the drones, they can hide behind their back. It doesn't even have to be US people. It could be the US hiring mercenaries from India sitting in Jakarta, sitting in Karachi, that's controlling the drones that are killing the innocents. Folks are marching on Capitol Hill.
Completely disassociated.
So, yeah, completely dissociated, right? Because you cannot have the soldiers who are your neighbors, like gunning people, right? And that's how, like I said, so I'm a little bit grim. That's why I'm buying gold and silver, because the answer to that with with this surveillance, with all these camera surveillance, with bots that's like a dog, monkeys, and you have people that are flying. It's a very scary world. Yeah, you're surveilled 24/7. And it's not going to be pretty. I don't even envy my daughter who's 14. I'm glad I'm 50. I live to tell the last tells, right? Before I pass out. And
the way you put it, it seems like it would actually be a blessing in disguise to get a solar flare and just completely wipe out the grid, and because that would neutralize, the control grid that we're talking about here.
I don't know about, well, maybe that's planned in the cars, right? And that's why you have the EVs, you have all the digital money. Imagine if a 747 can disappear in the middle of nowhere, when you have all the satellites that's blanket the Earth, they cannot track a 747. So what is it to say that somehow some of your money, 2 zeros disappear, and the fact like the money is disappear?
Well,
right?
that's what happened today. Berkshire Hathaway went down 99%. They had the whole trading. Did you see that?
What are you gonna do? What are you gonna do? Who are you gonna go? Imagine, right? Imagine like, who are you gonna go? Is it, oh, you go to the bank, you go to Wells Fargo and say, I had $1 million today, I have 10,000. Like, who are you gonna go? Like the Wells Fargo, you'd be talking to the bot, AI, right? You go to the airport and you scan your iris and you get it red, right? So I bought my ticket, here's my name. Who are you gonna go appeal? It's very, there's always parts of the world that's still not part of that scheme. So there's some parts in South America, some parts in Asia, some parts in Eastern Europe that are still defiant of this world integration. But
what countries?
It's a scary world we're looking at. You got to buy some gold and silver. That is your liberty. That's your freedom. Yes.
What countries in South America and Europe and other places that you mentioned?
I mean, you want to go to countries where they had just gone through this utopia in 1984, George Orwell scenario, right? Like the Serbias, the Polands. In South America, they still legalize dynamite in protest in countries like Bolivia, even in different parts. I cannot speak for other countries, but I lived in Bolivia for a long time. In parts of Southeast Asia as well, like in Thailand, for example, where their governments are not so almost sadistic in controlling. I mean, to the point they control the printing press, right? They can do whatever they want, but they still feel like they gotta dial up the notch, right? So they literally just want people to be begging for food. You never know, but there's always a party somewhere. We are looking at pretty scary scenario, and things are escalating very, very quickly. If you look at the events are unfolding, it's hope for the best, pray for the worst, prepare for the worst.
Pray for a solar flare. Well, hey, thank you so much for coming on, Mr. John Lee. Where can people find you?
Right. You can look me up on Twitter. Look for Silver Elephant, John Lee Silver Elephant, and you'll find me. We got about 2,000 followers, and my passion is actually travel and study of world economies and markets. So you'll see some analysis from me on interest rates on gold and silver, which is a marriage of fundamental analysis versus a marriage of fundamental and technical analysis. And then you can also look me up at our company at Silver Elephant. We're a silver producer. We are trading 80% from what we were 3 years ago, and we're revenue generating. And so we got good volume. Stock doubled in the last couple of months from 20 cents to 50 cents, but we're still away from the top, like at $5. So if you believe silver price is going to go higher and looking for a company that does generate revenue with no debt, I recommend and encourage you guys to check us out.
Yeah. Well, hey, if you guys enjoyed this content, be sure to give it a like, comment down below. Let me know what you think. Do you agree or disagree with any of John's projections for gold and silver? $6,000 silver, what, till 2030? What's your 2030? Yeah. Well, hey, I mean, that's 6 years away. Anything can happen between now and then. And if you haven't already, please subscribe to the channel. 85% of you guys who watch this content are not subscribed. So please hit the subscribe button. It'll help us out. It'll boost us in the algorithm. We'll be able to get more guests like John. And so with that, guys, I will see you in the next episode. Bye, y'all.